A simple edge in the last few years has been essentially the taco trade, and we've been talking about this a lot on the channel because we've seen a consistent pattern here. Specifically, we've had several instances where the president of the US, in terms of trade war stuff, kind of flares everything up, announcing new tariffs on a particular country and then walks them back or postpones them. And this is the classic art of the deal, which President Trump himself wrote that book 30 years ago or so. Which he outlined exactly his strategy. Essentially, you come to the point where you're almost going to make a deal, then you walk away from it so that you get a potentially better deal. It is a very repeated strategy, as we can see from this chart showing the S&P 500 versus how essentially Donald Trump behaved on social media, like making posts about things. And a lot of people have been very frustrated by this because if you know how Trump has behaved with this, people who have bought those kind of fear sell-offs have been rewarded very heavily, and people who have sold those fear-inducing and rightfully so, scary tweets and posts have caused, them to lose out on the potential rebounds. In fact, he put out a post, this is a great time to buy, right at the bottom. And to his credit, he was very right. Now, some people would say, he's manipulating the market or whatever, but who cares if he is or not? Our job as traders is to make money and to manage risk. And so at the end of the day, this has been a repeated strategy that if you've been focused and paying attention to how this plays out, there has been some real edge here. And I actually took a trade myself with this recently with the latest flare up around Chinese tariffs and all that stuff. And then him walking it right back saying, don't worry about China, it will all be fine. What you're looking at is a chart of the NASDAQ on the daily time frame. And what we can see here is this thing is in a very strong uptrend, especially following that huge sell-off that we saw earlier this year for, lo and behold, tariff worries. And this has been, again, a story that has played out many, many times, and yet the market seems to continuously fall for the same trick, which is, big scary tweet, Trump threatens that the negotiations are not working, and then he walks it back. And so I actually bought the NASDAQ. This was not the only reason I don't buy just based on a tweet, but there was some added confirmation that simply recognizing this pattern continues to happen and people panic sell and leverage gets washed out, I decided to buy on Friday. And so I picked up a long position in the NASDAQ with a stop loss initially below this low. So we've bounced, and I actually just trimmed my stop a little bit further into profit inside of our VIP room. I made this post just highlighting that I was deciding to trim my risk just below Tuesday's intraday spike lows. By the way, if you're interested in checking out our VIP signal service, it is a service that we offer here at my company, A1 Trading, where you can see real trades being shared by myself, Marco, Chris Pulver, Ivan, etc. And one thing that I think separates us from many signal services is, first of all, we share full context to why trades are being taken. And the second part of that is that we actually show proof that what we do has generated consistent profits overall in our own personal portfolios. In the top right hand of the screen right now, if you want to watch a video on me going through my performance for the last 5.5 years to 6 years, you can do so now. And if you want to get access to these VIP trading signals, you can check out the links in the description down below or scan the QR code that you see on your screen right now. I would love to have you join the group. Genuinely and wholeheartedly, it's a service that I would pay for myself if I was starting over. We do webinars, we have great chat room access for people who are serious about this, and you'll meet a lot of the other very serious traders who watch my videos, and I'm very proud to have an audience full of pretty dedicated, realistic traders. I think on this channel, I'm extremely, extremely grateful to attract a crowd of traders that are not your newbie, get-rich-quick type of people, but people who want to learn about the markets and learn about macro and what really drives prices. So come join us if you're interested. There's your quick plug. Let's talk a little bit more about this NASDAQ trade and why I think it continues to work out. Now, again, the Trump trade, the taco trade is one piece of it, but it is certainly not the reason that I took this trade in isolation. Scroll back in time in some of my old videos and you will listen and hear me say, I've been bullish on the NASDAQ, but waiting for a pullback. So this was my first chance. Now, admittedly, I thought we would get more chances. Like everyone else, I was like, whoa, this looks scary. Markets are going to keep going lower. And, I thought that was a distinct possibility. But I chose to buy anyways because my system told me the path of least resistance was a break higher. Let me show you what I mean. So here's a look at the NASDAQ. I've shown this in recent recent videos, so I'm not going to go over this too much, but technicals, institutions, inflation data, and economic data have generally suggested bullishness for the NASDAQ with targets back over the highs. So I think that there is room for the NASDAQ to continue to push higher, but let's take a look at the overall situation. Inflation has recently been rising. That's not a positive thing in terms of the stock market, but we also have to remember where we're coming from. If we scroll back in time, interest rates are expected to continue to come down because inflation has severely moderated, and we also have a jobs market that could really use a little bit of stimulus in the form of rate cuts. Rate cuts are generally perceived as very positive for stocks and gold, especially for stocks if the economy holds up, and especially for gold if the economy crumbles. Let's think about that for a second for the gold traders out there. Why would gold love rate cuts plus economic turmoil? Well, that's just a chaotic environment in which gold shines bright. But specifically for the NASDAQ, a falling CPI on big picture terms, which by the way, the Fed still thinks we are on track to have long-term inflation targets hit, meaning they still think inflation is going to work its way back down to 2%. As long as that is the narrative and they're still set to cut interest rates, that is a tailwind for the stock market as long as the economy is holding up okay. And to determine if the economy is holding up okay, we can look at GDP growth, which remains elevated and stronger than expectations in recent reported data points. And while we're in the dark in terms of the government shutdown stuff, meaning we're missing some economic data from the government, we got some interesting data from key players in the US economy, the financial banks, right? So Bank of America reported their earnings and things looked good, meaning the optimism around the consumer. Remember that if you ran a bank, you would have a lot of information about consumers, depositors, businesses. The health of the economy is built around the banking system. So when you have Bank of America or Wells Fargo who are reporting their earnings this week and have been significantly beating expectations, this bodes well for the state of the US economy. And so a strong economy leads to strong earnings potential for the key drivers within that economy. So when we look at something like the NASDAQ, which has big companies like Apple, Amazon, Nvidia, Google, my path of least resistance, best educated guess would be as earnings approach, that will be a positive thing for stocks, as I expect earnings to likely be very strong in the coming reported data.
Well, I've been doing my back testing, I've been trading for a while, I'm finally qualified to get a payout. Let's do it.
All right, move over, you bag of bones. I've been funded with Maven for a little while, and it's time to request a payout. Watch this. If you're looking to get funded, check out Maven Funding down below in the description. With our promo code, as you see on the screen right now, you can get an additional discount off of any of their challenges, and they offer some of the fastest payouts in the industry. Not only do they offer really fast payouts, they also have some of the best prices in the industry by far. So if you're looking to get funded, check out Maven down below in the description. And in all of this, the gold market continues to roar higher. Take a look at the moving averages. We are now officially a 23.3% drop away from the 200-day moving average. And if we went from the 200-day moving average, that is a 30% up move from the moving average. I mean, point is, we're very, very far away. We're very stretched to the upside here. And I do think that a very normal thing for gold to do in the coming weeks to months would be to see some sort of pullback. But as I've been saying for months now on this channel, the path of least resistance is to stay bullish on precious metals and not to try and call where that pullback is going to take place. Because let me be very clear, I'm saying I think we're due for a pullback and that price is overextended, but price could get more overextended before we get a pullback. So I have no interest and no edge in my view trying to short the gold or silver market in a melt up phase. The bigger question that I would ask is this warning of something more sinister. Why is gold going up so much? As we know, gold tends to move up like this when something is severely wrong. And gold has had one of the most incredible rallies of its own history in the last 2 years. I mean, this thing has been doing incredible from the 2024-2025 rally that we have seen which started, I suppose, late 2023 in October about, this is really only 2 years into the move. Let me show you something about gold in the 2000s. In 2001, 2002, following everything that was going on with the dot-com blow up that was happening in the stock market, gold started rising and it did not stop. Take a look between 2001 and 2011, really, you had just a monstrosity of an upward trend. And I would not be surprised if gold is doing something in the works here. I mean, here's something that happened, right? So 2008 was the big second stock market blow up. Gold rose all the way into that and then peaked out, fell initially during the 2008 drop as everybody needed cash. So they sold everything, real estate, stocks, gold, etc. Everything got liquidated, but then gold rebounded and continued to the upside. So when I look at gold now, do I think it's stretched? Sure. But again, you just don't fight the dragon that is a gold bull run. And now that I have given you a full disclaimer as to why I will not short gold, let me make a case for shorting gold. Again, I am just kidding. I'm not actually willing to short gold, but let me make a case for why I think a pullback could be coming for gold, not that I am taking shorts on it. If we take a look at seasonality, the annual full year seasonality on a normal year, which this is not a normal year, but could still succumb to seasonality, would be to expect some choppiness or sideways to downward price action in gold for the remainder of this year if we were to follow seasonal patterns, which, by the way, for gold this year, we've actually, this red line reflects what we've done this year, and gold has mostly followed suit in terms of year-to-year trends. So perhaps a pullback is in order when it comes to looking at the price action in gold. And again, that might just mean we go sideways for a little bit. Doesn't mean we have to necessarily drop, but we've been on an absolute one-directional heater, and we'll see how long it can keep going. I also showed you that GDP chart. I don't think this is particularly positive for gold because strong economies in the world are not super supportive of higher prices for gold, simply because, remember, gold loves a little chaos. Strong economies, that doesn't really scream chaos. And let's take a big picture look at the overall US economy. What we can see is we saw that GDP growth number, which surprised expectations, coming in at 3.8%. That was higher than forecast by a good bit. We also had slightly better than expected PMI data, retail sales was strong, and unemployment rate is still at 4.3%. But arguably one of the biggest reasons that gold continues to rocket higher is that the major central banks of the world are expected to continue to cut interest rates. And just keeping things really simple, remember, gold loves rate cuts, not just the US, but the international central banking community. What are they doing? They are collectively expecting to cut interest rates, other than the Bank of Japan, which is expected to modestly look into hiking interest rates. But recently we heard from the new prime minister, who is more dovish. Well, we didn't hear from her, but we did kind of get the idea that she's a more dovish person or perceived official. And so there may be less likelihood that even the Bank of Japan is hiking rates. So the big picture is when we add in the full story here, look at your major, UK, US, Aussie, Kiwi, Euro, CAD, JPY, the general trajectory for interest rates across the world is to continue to come down, bolstering the case for bullishness in gold. Remember that if interest rates are coming down, the bond yields are expected to also potentially come down as well, meaning you get less return on passively buying bonds and holding on to them, making the precious metal even more attractive. By the way, if you're interested in trying out the Edge Finder, I'll leave a link in the description to where you can sign up for information about our trials here on the tool. I'll leave that linked in the description down below. And if it's easier, you can simply scan the QR code that you see on your screen right now, which will pop open a form that you fill out. Just fill that out, let us know a little bit about what you're looking for, and we will send you right away some information on the free version of the Edge Finder, as well as what our trials entail. If that's something you're interested in, if you are serious about macro trading and looking to take things to the next level, check out the link in the description or scan the QR code that you see on your screen right now. We know that central bank buying is off the charts here recently for gold, And part of the reason why I just adamantly will not short gold, even though macro wise, I think we're due for a pullback. And I've had some comments here recently frustrated by my lack of conviction either direction on gold. I know it's more interesting when I get up on my videos and say, gold's a buy or gold is a sell. But to me, that's something you sometimes have to just put in a drawer and close that drawer away, because sometimes there's nothing to do on a chart other than to sit back and watch this thing melt up. I think if you're short, it's a rough ride. If you are long, you know, to me, I would be, if I was in a trade, I'd be trailing stops. I'd be just kind of letting it run, maybe taking some partial profits on it. Whatever you do, you know, you make your decision if you have trades on it. But again, shorting is an absolute no, and buying, I think there's just not a great risk to reward profile at these levels. And in 3 years from now, traders who have patience, a system, a strategy, a back-tested approach, they're likely to still be trading. But people who are emotionally buying or shorting gold and don't really know why they're doing it other than the hype or the perceived overboughtness, right? That's been a terrible reason to sell gold for the last 3 years. Overbought in this market means buy. Now again, I don't believe that personally. I'm saying that jokingly, but I mean, literally pull up an RSI on your own chart. Almost every reading of overbought on gold has been a better buy signal in the last few years than a sell one. The dollar index is also pulling back here, looking like it might be a buy the dip opportunity in my personal opinion. I'm already long the dollar in a couple different currency crosses, but there may be some more that I want to add to the basket. Specifically hitting this 50% retracement past resistance here could potentially turn support, and I actually think that we are still headed to 100 on the DXY. So let's take a look at some ideas within the Edge Finder. If I go to my top setup simple view, I'll show you exactly what I'm looking for. If you know the camera was off, this is literally how I'd approach it. I'd say, okay, top setups, simplified view, major currencies only. I've got dollar CAD on the list and dollar Swiss. I'm already long dollar Swiss, so let's take a closer look at dollar CAD. But before we take a look at the technicals, let's pull up the AI scanner here, the AR market scanner, and we can see dollar CAD is getting a +10 score. Bullish technical readings, institutional activity looks bullish, sentiment, the crowd is bearish, inflation data favors the US dollar, jobs data favors Canada, so that works against us, economic growth signals favor the US dollar. So now that I've got a general synopsis of what the Edge Finder has found, let's pull up the technical chart. By doing this, we can go to dollar CAD, and now we can look for some pullbacks, and we don't have one. So that's pretty much a walkthrough of how a trade setup for me on the Edge Finder would work. Let's just say, for example, that the dollar CAD was pulling back, and let's say we were sitting at this 38.2%. I have the green light from Edge Finder. I like the technical pullback, and I would probably execute a trade there. But because we're sitting at these highs and we haven't quite had a significant pullback, this would go in the wait category, and I would move on to the next setup. Now, again, that is how I trade with Edge Finder every day. I essentially go through my watch list here. I specifically like to remove minor currency pairs because there's a lot of them, so I'll just start with this list. So I'd be looking at dollar CAD. I personally don't really trade platinum, Dow Jones, NASDAQ. I'm already long NASDAQ, so this was a trade setup in Edge Finder that I executed last Friday. The Nikkei would be interesting to look at, so let's pull up that one. So if I pull up the Japanese stock market just to get an idea here, yep, we're back at the highs here, so nothing for me to do. Would be waiting for pullbacks. I actually was watching this for a pullback earlier this week. Didn't quite come down to a level I was willing to take a buy on, so still waiting on the Nikkei, but would like to buy some of that on a pullback. Dollar Swiss, I have a small long position on, and copper is another thing I'd actually be interested in as well. So if we pull up copper here on the technical charts here, this actually looks like it's got a constructive rally starting here. So if we zoom in and kind of ignore that ginormous drop due to tariffs, I mean, this is the candle you call your mom about. I mean, that is an insane candle, right? I mean, I called my mom. I was crying. I was tears in my eyes, right? I was screaming. I was kicking. I'm just kidding. Or was I? Anyways, the copper move here basically looks like we've still got a constructive bull trend here. You had, just like many risk assets, which I would say copper falls into the category of recession, not proof, the opposite of proof, like sensitive. Yeah, so basically we had the big drop on Friday, hit support and bounced. So if we come down to this area, to me, copper might be one to pick up and look for some long setups there as well. I'll mark that level of support here on the screen, and again, would come back to see if we did get a drop in copper, You could set an alert if you prefer to do that. I'm just looking at the charts, every day. And so I just will come back and check to see what's happening with copper at that time for possible trade setups.
Hope that video was helpful to you. And I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel. So don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.